Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Chinese stocks, 5% down on a volatile trade. Mainland stock index dramatically took a sell-off on Friday, with the Shanghai Composite index losing as much as 7% earlier in the session. The Shanghai bourses fell deeper into negative terrain after briefly hurling itself back into the start of the afternoon session. The move comes after China's securities regulator relaxed a little bit the rules of using borrowed money to make stock purchases on Wednesday, but the move proved to have little effect on helping the sentiment, and the index broke through the key psychological barrier of 4,000. That's a move for the first time in about 3 months' time in the previous session. Also elsewhere in Asia, we're looking at Japan's index, 225 index above the flatline, as hefty gains in the banking sector helped to offset a nearly 4% slump in the index. Heavyweight, fast retailing. Australia's S&P 200 index gave up most of the Thursday's gains after key resources sector took a hit from declining commodity prices. About commodity prices later into the session. Right now we're taking a look at European equities. They're expected to open mixed trade on Friday as investors look ahead to Sunday, when Greek referendum on the country's future in Europe takes place. All eyes are on Greece at the vote this weekend, at which Greeks are expected to vote on whether to say yes to reforms and effectively more austerity, but at least a future in the Eurozone, or no, and potential exit from the single currency zone. Capital controls on Greek banks will remain in place until after the vote. The European Central Bank policymakers plan to next discuss emergency funding assistance for Greek banks on Monday. As well as the commodity sector, gold was steady above 3.5-month low on Friday, as sluggish U.S. job data tempered expectations for a September rate hike by the Federal Reserve, and of course hurted the dollar. The metal was steady at $11.67 an ounce in Asia trade, as well as it fell to $11.5685 on Thursday. This was the lowest since mid-March, but paired some losses after the U.S. economic data. Data on Thursday shows non-farm payrolls rose 223,000 last month, below expectations. Payroll growth in April and May was also revised downwards. At least 432,000 people dropped out from the labor force. Before the data released, there had been strong expectations in markets that the Fed would raise interest rates for the first time in nearly a decade around September, given recent strong data on consumer spending and housing. But the softer than expected jobs data prompted investors to lower their bets for September rate hike. For the week, however, the balloon is still down 0.7%. This is its second straight weekly loss. Oil in the energy sector dropped on Friday as a rising U.S. rig count stoked fears of oversupply, and after Chinese regulations opened an investigation into suspended stock market manipulation, front-month U.S. crude futures were trading at 56.70 per barrel during the Asian session. That is down 23 cents for their lost settlement. As well as we know, today's European markets are closed due to Independence Day. There are no major news announcements. That's all for today. Thanks a lot for watching us. See you next week. Bye-bye.